Cybin Inc. is a Canadian clinical-stage biotechnology company pioneering next-generation psychedelic therapeutics for mental health care. Founded in 2019 and headquartered in Toronto, Cybin operates across Canada, the United States, the United Kingdom, the Netherlands, and Ireland. Its core mission is to develop novel treatments led by proprietary drug candidates targeting major depressive disorder and generalized anxiety disorder using deuterated analogues of psilocin and DMT. Cybin's lead program, designated CYB03, is a deuterated psilocin analogue entering pivotal Phase 3 clinical studies under the Paradigm program. Two randomized 12-week trials named Approach and Embrace are underway with anticipated top-line results in early 2026. CYB004, a deuterated DMT molecule, is progressing through Phase 2 for generalized anxiety disorder with initial safety and efficacy data expected mid-2025. These drugs are designed for intermittent dosing and have demonstrated sustained remission up to 16 weeks post-dosing in Phase 2. Clinical partnerships have been established with Osmond for trial operations and patient engagement, and Thermo Fisher Scientific for manufacturing support, positioning Cybin for eventual commercialization. Financially, Cybin reported net loss of approximately 113 million Canadian dollars for the fiscal year ending March 31st, 2025, up from 78 million a year prior. Quarterly losses for Q4 of fiscal 2025 totaled around 31 million Canadian dollars. Cash-based R&D and administrative expenses reached roughly 100 million for the year. At quarter end, Cybin held approximately 135 million Canadian dollars in cash, excluding prepaid expense balances of 23 million, and maintains access to additional funding via an at-the-market equity program, allowing issuance up to $100 million or Canadian equivalents. Net cash burn over 9 months reached 80 million Canadian dollars. Cybin does not generate product or commercial revenue at present. It remains deeply in development stage. Its value depends on achieving regulatory milestones and clinical proof of concept. The company has raised institutional support via convertible debentures, accessing up to $500 million in financing, aimed at funding Phase 3 costs through 2027. Governance and shareholder dilution remain considerations, with equity offerings and warrants impacting outstanding share count. Cybin has built out an intellectual property portfolio currently comprised of over 90 granted patents and more than 230 pending applications. Key patents include protection for CYB03 through 2041 and CYB004 until 2040 in major markets such as the United States and Japan. Its patent strategy encompasses method of delivery, formulation, and composition of matter claims, providing exclusivity and positioning Cybin for partnership or licensing opportunities. Management is led by CEO Doug Drysdale, who oversees clinical execution and strategic relationships. The company previously acquired Small Pharma in 2023, strengthening its patent portfolio across psychedelic analogues and manufacturing processes. The R&D team has advanced CYB03 from Phase 2 into Phase 3 on schedule, maintained timelines on CYB04, and successfully initiated the ATM shelf program in early 2025. However, shareholder dilution via equity sales and high share-based compensation remain sources of investor concern. The stock has gained renewed attention due to pipeline momentum, especially the start of Phase 3 dosing and breakthrough therapeutic designation for CYB003 in major depressive disorder. Analysts have responded with strong buy ratings and price targets ranging from 35 to 114 Canadian dollars per share, implying potential upside exceeding 500% from current trading levels. Short interest has also attracted attention, and recent social media chatter highlights speculation and retail interest around psychedelic stocks. Peer benchmarking within the psychedelic biotech sector is limited given the nascent market. Compared to competitors such as Compass Pathways, Atai, Small Pharma, and Mind Medicine, Cybin distinguishes itself by having a drug in Phase 3, a robust IP portfolio, and strategic manufacturing and trial partnerships. Market caps for these peers typically range in the low hundreds of millions, making Cybin's valuation contextually high, but early clinical success may support re-rating. A simple intrinsic valuation using a future revenue model suggests CYBN could generate up to 8 to 31 billion US dollars in peak annual sales if capturing roughly 1/3 of major depressive disorder treatment markets, even under conservative pricing and adoption assumptions. Cybin's current market capitalization in the 200 to 300 million Canadian dollar range stands in stark contrast, highlighting a wide performance gap between potential and present valuation. Technically, Cybin shares have traded between 6 and 19 Canadian dollars over the past 12 months. Recent uptrends reflect growing investor optimism, but trading volumes remain modest, and the stock is volatile. Key support lies around 6 to 8 Canadian dollars, while resistance sits near 12 to 13 before prior highs. Breakouts above 15 could signal further retail-driven momentum, while declines below 8 may raise concerns of funding runway and dilution risk. As a speculative biotech investment, Cybin is best suited for investors who believe in the transformative potential of psychedelic medicine and accept high developmental and regulatory risk. Catalysts to watch include Phase 2 CYB04 top-line data, continued enrollment in the CYB03 Phase 3 trials, execution of funding programs, and any emerging licensing, partnership, or commercialization agreements. For those inclined to invest, a cautious entry zone might be between 8 and 10 Canadian dollars, giving coverage in case of trial delays or funding dilution. Aggressive investors may consider accumulation up to 12 Canadian dollars in anticipation of positive clinical updates. Risk-averse investors or value-oriented traders may prefer to wait until Phase 3 top-line data triggers a result or share licensing deals materialize. In summary, Cybin Inc. is advancing at the forefront of next-generation neuropsychiatric drug development focused on deuterated psychedelics. It is supported by strong early clinical evidence, regulatory designation, an expanding IP portfolio, and strategic partnerships for manufacturing and trial execution. The stock remains highly speculative, carries significant dilution risk, and depends on clinical success. That said, if Cybin transitions CYB03 and CYB04 successfully from trials into commercial offerings, its current valuation could dramatically understate future potential. Let me know if you'd like an extension into discounted cash flow modeling, regulatory risk analysis, peer comparatives in detail, or scenario-based valuation planning.